Good morning, everybody, and welcome to the Ankerstar Wealth Morning Update. I have three topics for you this morning. First of all is what's going on with Apple. The stock's kind of down a little bit for the year to date, but also we got news this morning. They've scuttled the iCar, the long awaited. I was kind of hoping they would make it, but not everything not everything Apple does is fantastic, right? So Mike's going to lead us off this morning talking about some hits and misses, some personal stories that he has, and ultimately getting back to whether or not Apple is a stock we should own. And, it is number one in the book. So obviously I have a strong opinion on it. Second topic for the day is what's going on with interest rates for home mortgages. The 30-year mortgage is still averaging above 7%. It's like 7.04%. And that's tough. And when you have high interest rates like that, it slows down the market, which is fine for a while until it isn't. And we're going to talk about how that might affect the Fed's choices going forward this year. And the last thing we'll talk about is a favorite topic of mine and probably every financial advisor out there is the idea of the 401K millionaire. Yes, it is as simple as you start when you get a job and you put away, it used to be 10%, I say 15%, put away 15% of your salary. Eventually you will max it out and you don't touch it. You don't change it. You stay as aggressive as you can absolutely stomach. And guess what? You hit 40s, maybe 50s, and you're a millionaire in your 401k anyway. And a lot of people are like, well, I wish I could reach that money. Well, no, it's your future money, right? But let that grow. So we're going to talk about the numbers there. But before we get started, this is a personal financial education presentation. So you have to do your own due diligence before acting on anything you hear in this presentation. More information is available at ankerstarwealth.com. Mike, over to you to go ahead and start us off with what's going on with Apple.
Okay, so some news came out that Apple is dumping their electric car. And if anybody's been tracking the EV markets, you know that it's a little bit overcrowded in that market. So I absolutely believe Apple's making the right choice here. What scares me as I read through this article is that they'd been working on it for 10 years. So that's a long time to go before releasing a product. So and Apple, hopefully will go more focused. It sounds like they're going to go focus on artificial intelligence, which is a great place to be. I remember when the Teslas came out and Tesla really took off, it was like Apple's coming out with an iCar, Apple's coming out. It was almost like what I call vaporware, like don't buy that Tesla because Apple's coming out with that iCar. Well, I think the market left them. So, but when we look at Apple's overall stock performance, and when you look at this graph, it goes back to like 1994. If you go back to their old Super Bowl commercial in 1994, the stock has done absolutely fantastic, especially if you want to look at it over the last 7 or 8 years. And when I think about that, it's kind of like we always think of Apple with Steve Jobs. My son has written papers on Steve Jobs, and Steve Jobs, a clear innovator. But when we think about, but look what they've done since he's passed away. Tim Cook has been all about execution. So, a company can be a mix of innovation and then eventually they have to be able to execute. They have to be able to create, they have to be able to sell. And that's clearly what Apple has done. So when I think of Apple, we think of their fantastic products, and I'm going to pull this up, innovative products that shape the 21st century. And, I'm just going to go through 5 of them. 5 or 6. The Mac, we know, and they battled the PC, and the PC still outsells them, but the Mac is a staple. Many companies use it. The iPhone, that's whether, and I'll show you their market share. They have about 20% of the worldwide shipping for phones, the iPhone, but that's the largest of any. The iPod, the iPad, and the Apple Watch, and I think it's the AirPods. So all of these products I use or have used in the past. But when I think about it too, and I'm going to give the example specifically with the iPod. Apple is not always the first to market. I had a Dell MP3 player that was very similar to an iPod. It was, you had to click on it, but I could listen to music and all that. But when the iPod came out, it blew it away, so much so that I think most people think the iPod was the first one out, but it wasn't, because I know I had that Dell. I probably should have kept it, probably as a collector's item. So what Apple does is they are excellent at what they release. You know, the iPhone was not the first cell phone. I mean, Nokia had a huge market share. BlackBerries were out there. I mean, all these other ones are out there, but it feels like iPhone was the first one out there. They've just totally obliterated that competition. Motorola Razr. Some of you may have had one of those. But as good as Apple is not perfect. And I also have to kind of show Apple's biggest flops of all time. So found a website
right.
with that. So I don't know if any of you bought the $10,000 Apple Watch edition. It could be as high as $17,000. That was a flop. I did not buy that product. The iPhone 5C, which was a plastic cheaper version. Jobs was against this, but I think he had passed away, and they released it. I think I had some kids that may have had one of these, but that went away. The Power Mac Cube, never had that. I don't know much about it. The Message Pad, and then if you follow any history on Apple, the Lisa, which I believe was Steve Jobs' daughter's name, or if you saw the movies, but that was a flop. In fact, it's interesting. They cost $10,000, which is about $30,000 today. They sold 100,000 and they dumped the 2,700 of them in a landfill. So, wow, $10,000 computers going into the landfill. So when you look at Apple, fantastic company, tops in our books. The profit margin they make on their product is incredible, very desirable. Every time they have a release, people are hanging on news, what's in it, waiting to buy it. Incredible company. I did want to show, just to show you the market share for shipments of smartphones. For 2023, Apple shipped 20.1%. And if you think of on top of that, it's probably the most expensive smartphone. So when you're the most expensive, probably the highest profit margin, and you also lead in market share, that's just an example of a stock that we want to be invested in, because that's a good product that sells. And then last, for any of you that are passionate about Apple, if you've never checked out this, I'm going to give a reference to Business Wars. And you can listen to podcasts about Apple and how they battled Microsoft, Bill Gates and Steve Jobs. And you can listen to some history of it and how this company really took off. So with that, I'll turn it back over to Steve.
Yeah, you bet. And, I could talk about Apple for about the next 10 hours, but I won't. But I do want to share that, here's that long-term chart, or excuse me, here's the 1-month chart for Apple, and, it's down right now. And when I think Apple, your experience on Apple depends on where you got in, much like with any other stocks. So, if you got in a month ago, you're like, I don't know what the hype is about. If you got in 6 months ago, you're flat. And it's like, well, that's not that cool. If you got in a year ago, well, still, you're up, but not a tremendous amount. But if you happen to, and my parents, have invested in individual stocks for years, somewhere in around the 2009, 2010, coming out of the global financial crisis, that's when I started loading up on Apple. So obviously when you have a single digit, cost basis on this, it's been a fantastic experience. And largely, if you join Ankerstar Wealth, which was Afterburner Financial in February of 2014, we just went over 10 years. That's the first purchase I made in your account, and I will stand by that. If you reviewed your account statements from 10 years ago, when you signed on, Apple was the first stock that went in, and yeah, you're welcome. So it's been a great story for us. The question becomes, can it continue? What are they using there? What is the focus now? It's rumored, because Apple is, of course, silent. It's rumored that it's all AI coming out this summer. Just like Mike said, they're not first to market. They're not trying to, shock you there. They're trying to take what's out there, make it better, and then release something epic. So I'll keep my fingers crossed for that. I will say Tim Cook is what I would say the best CEO. If I had to pick one, I would say Tim Cook, hands down. Apple has just been, when you invest, you think about horses and jockeys. Well, the horse of Apple is fantastic, but the CEO, the jockey and the leadership team has to be solid too, and just a great combination out there. And I remember the first product I had was the Nano. Is that the little square one? I think like an inch square.
Yep.
And my buddy was telling me, you got to go get one of these. And it was like $40. And I was like, yeah, okay, sure. Before that, I had the Walkman with the nasty cord. And I just remember when I opened the Nano, it was like Christmas, right? Their packaging is still epic. It's just I'll pull this tab and it's just epic. It really is. And then I got to where this Nano and I pulled the cord out and the cord just kind of dropped straight down. It didn't have any kinks in it. And it was just like, yeah, your cord will always be like that. It's just a superior engineering design. And it was just like, wow, they're really onto something here. So enough about Apple. Like I said, I could talk about it forever, but let's switch to something that is starting to wear on everybody's minds. And this is 7% interest rate. So, we're all out there and everybody's situation's different, but there comes time in your life to move. Whether you're upgrading, whether you're downgrading, whether you're getting a job somewhere else or thinking about that, or it's just time. The neighborhood maybe isn't going in the direction you wanted, whatever. Back when money was free at 3% or less, you could kind of move here, there, and you can do whatever you wanted, right? I mean, when you buy and sell a house, you're going to lose, $30, $40, $50,000 in transaction costs. That are all largely hidden from you, so it's not free. But certainly, when you're trying to run the math to move into a new home and you're looking at what does the payment look like at 7%, that's going to slow things down. So we had the big rate hikes in 2020, 10 of them, 5% total. Went from below 3% to over 8% for a little while on the 30-year mortgage. It's back down to 7% and pretty well stabilized there. Well, in the housing industry and moving, you kind of can drag your feet for a while, right? And we're at that point where it has been, the full, almost 18 months of this with the interest rates that high. So the question becomes move now or move later. And I talk about this literally every week with somebody. If you move now, you're going to pay more in interest, but you're going to pay less for the house because housing prices are starting to sink in certain places. And that's at, 18 months, nobody moves. So therefore housing prices can kind of stay unrealistically high, right? Because there are no transactions to start bringing them down. But once you start seeing some transactions hit the comparables, the comps, you're going to start seeing a decent drop. So if you're looking to get a deal, now would be the time to get the deal, pay more in interest with the hopes of being able to refinance later. And if you wait, the other side of that is now instead of offering, if somebody's asking, $500 for the house and you offer $460, is once interest rates start to drop, they tend to drop very quickly. And at that point, the house prices, it'll be get back into the bidding wars and over, you're going to end up paying more for the overall house, even though you're paying less in interest. So really, and I've got no dog in this fight. It really is better to move now and then refinance later. Everybody's situation is different. So, but I did want to talk about that now. I'd be happy to talk about specifically with you if you'd like. Last thing I'll talk about today is 401K Millionaires ranks your 11.5% in 2023. Well, look at the market, right? 20% plus in 2023 if you're fully invested. If you, again, like I said earlier, if you're taking the risk, you got the reward, right? You got to stay on the coaster. You can't get weak when it gets tough. But if you can stay on the aggressive roller coaster, it pays off. And generally in your mid 40s to early 50s, if you started way back when. And people are like, well, who starts way back when? A lot of people start way back when, right? So just, so teach your kids, right? If you did, tell your kids, do what I did. If you didn't, tell your kids, don't do what I did. But get them started early when they get in the workforce, get them thinking about this stuff, 401ks, IRAs, it does add up. Poster children for staying the course. Absolutely. When I look back, sure, did I lose? I lost more than I made in salary. I lost more net worth than I made in salary twice now. In 2000 and 2008. And that hurts when you're like, hey, I worked a whole year and I have less money than when I started the year with because the market sold off hard. I made some moves in there, but no matter how skillful you are about making moves, you're going to take the hit. But if you stay the course, the snapbacks that we talk about all the time, they'll get you done, right? I mean, the huge snapback out of COVID. 2022 was a heinous year in the market, huge snapback in 2023. So whenever the market sells off, if you, stay invested, move some stuff around if you need to, but get more money moving in and you're going to be happy that you did. So that's all we have for you guys today. Thanks so much for listening in, and we will be back with you tomorrow. Have a good one.